Thank you. I think. Okay, I think this is done. Thank you very much. Thank you. Thank you. Good afternoon, everyone. I'll make my statement. We have already shared the MPC resolution with all of you. I'll just go through my statement, and thereafter we will have some questions and some observations. Now, during June 3rd and 4th, 2019, the Monetary Policy Committee assessed the recent macroeconomic developments and the outlook in its meeting today. It voted unanimously to reduce the policy repo rate by 25 basis points. So we had discussions on June 3rd and 4th, and then again we sort of took the decision today, and the decision this time has been unanimous. And the decision has been to reduce the repo rate by 25 basis points and also to change the stance of monetary policy from neutral to accommodative. The unanimous vote reflects the resolve of the MPC to act decisively and act in time. I thank the MPC members for the rich and fruitful discussions which are reflected in the resolution and in the policy decision. I also wish to express my gratitude to our teams in the Reserve Bank of India for their hard work and diligence in providing valuable support and inputs to the MPC for its work. Let me now turn to the key global and domestic developments that the MPC has reviewed. At the outset, the MPC noted that global economic activity has not been able to sustain the improved performance seen in the first quarter of the calendar 2019 in the face of deepening slowdown in trade and manufacturing, which has impacted advanced and emerging market economies alike. Inflation remains below the target in several economies. In advanced economies, incoming data for second quarter of 2019 point to loss of momentum relative to the first quarter. In the major emerging market economies, economic activity has either slowed or has contracted. It is in this context that the central banks across the world have moved to an accommodative stance in setting monetary policy. Financial markets have been unsettled by the acrimonious US-China trade tensions. Crude oil prices remain volatile, reflecting evolving demand-supply conditions and geopolitical concerns. Most emerging market economy currencies have depreciated against the US dollar. On the domestic front, the MPC noted that the May 31st, 2019 data release of the National Statistical Office showed that the GDP growth for 2018-19 has been placed lower by 20 basis points at 6.8% relative to its February 28th estimate. In Q4 18-19, GDP growth decelerated sharply to 5.8%, down from 6.6% in Q3 and 8.1% a year ago. On the supply side, agriculture and allied activities contracted while manufacturing activity weakened sharply. Service sector growth accelerated, although construction activity slowed down markedly. Looking ahead, the Indian Meteorological Department has predicted that the southwest monsoon rainfall, that is June to September 2019, is likely to be normal at 96% of the long period average. The third advance estimates of food grain production at 283.4 million tons for 2018-19 were lower by only 0.6% as compared with the final estimates for the previous year. Further, the stock of food grains at 72.6 million tons as on May 16, 2019 were 3.4 times the prescribed buffer norms and provide a backstop against any supply disruptions due to weather adversities. In the industrial sector, growth in 8 core industries decelerated sharply in April. Credit flows from banks to large industries, however, strengthened though they remained somewhat muted for micro, small, and medium industries. Seasonally adjusted capacity utilization in the manufacturing sector slipped to 75.2% in Q4 from 75.8% in Q3. Import of capital goods, a key indicator of investment activity, remained anemic in April. High frequency indicators suggest moderation in activity in the service sector. Turning to inflation, the MPC took note of the fact that retail CPI inflation remained unchanged in April from its March level of 2.9%. Higher inflation in food and fuel groups was offset by lower inflation in items excluding food and fuel. Inflation expectations of households in May 2019 round of RBI's survey declined by 20 basis points for the 3-month ahead horizon compared with the previous round, but remained unchanged for the 1-year ahead horizon. Normal growth in rural wages and in the organized sector staff costs remain muted. Liquidity in the system turned to an average daily surplus in early June after remaining in deficit during April and most of May due to restrained government spending. Apart from liquidity injections through LAF operations, the RBI conducted two OMO purchase auctions in the month of May amounting to 25,000 crore and a US dollar buy-sell swap auction of $5 billion equivalent to 34,874 crore for a tenor of 3 years to inject durable liquidity into the system. An OMO purchase auction of rupees 15,000 crore has already been announced to be held on June 13th, and this will be naturally the auction would be held during next week. Transmission of cumulative reduction of 50 basis points in the policy repo rate in February and April 19 was 21 basis points to the weighted average lending rate, that is WLR, on fresh rupee loans. Interest rates on lower tenor money market instruments remained broadly aligned with the overnight WACR, reflecting near full transmission of the reduction in policy rate. The 10-year government securities benchmark yield has also declined by about 40 basis points from its average in April 2019 to about 7%. This was the position before we announced before the MPC resolution and the decisions were put in the public domain. Thereafter, the developments I have to see. The Reserve Bank will ensure that adequate liquidity is available in the system for all productive purposes. Exports grew by 0.6% in April 2019, but imports grew at a somewhat accelerated pace, leading to a widening of trade deficit. After a sharp recovery in March, net foreign portfolio inflows have been relatively modest at US $2.3 billion in 1920 during the months of April and May. India's foreign exchange reserves were at 421.9 billion. I repeat, 421.9 billion as on 31st May 2019. Taking into account these factors, the impact of the recent policy rate cuts, and assuming normal monsoon in 2019, the MPC revised the path of CPI inflation to 3 to 3.1% for H1 2019-20 and 3.4 to 3.7% for H2 of 1920, with risks broadly balanced, as against 2.4% for Q4 of 18-19, 2.9 to 3% for H1 of 1920, and 3.5 to 3.8% for H2 of 2019-20. Risks around the baseline inflation trajectory emanate from uncertainties relating to monsoon, unseasonal spikes in vegetable prices, international fuel prices and their pass-through to domestic prices, geopolitical tensions and financial market volatility, and the overall fiscal scenario. The headline inflation trajectory remains below the target even after taking into account the expected transmission of the past two policy rate cuts. Hence, there is scope to boost aggregate demand and in particular private investment activity while remaining consistent with the mandate of flexible inflation targeting. The MPC also revised the projection of GDP growth for 1920 to 7% in the range of 6.4 to 6.7% for H1 and 7.2 to 7.5% for H2 of 2019-20 with risks evenly balanced as against 7.2% in the range of 6.8 to 7.1% for H1 and 7.3 to 7.4% for H2 with risks evenly balanced, which was the earlier projection. The MPC noted that growth impulses have significantly weakened as reflected in a further widening of the output gap. So I have broadly explained the background of the decision of the Monetary Policy Committee to shift the stance to accommodative and also to and also for a rate cut of 25 basis points. Let me now set out some of the developmental and regulatory policy measures that we have announced today. In the area of regulation and supervision, banks have been monitored against an indicative Basel III leverage ratio of 4.5% to mitigate risks of excessive leverage. Keeping in mind financial stability and with a view to moving further towards harmonization with Basel III standards, it has been decided that the minimum leverage ratio should be 4% for domestic systemically important banks and 3.5% for other banks. In pursuance of the guidelines for licensing of payment banks and small finance banks of 27th November 2014, it is proposed to issue draft guidelines for on-tap licensing of small finance banks by end of August 2019. More time is, however, needed to review the performance of Payments Bank before considering the license of more Payments Bank to be on tap. It may be recalled that in August 2010, the Reserve Bank introduced a separate framework for regulation of systemically important core investment companies. In the light of the increased complexity of these corporate structures, their growing interconnectedness with the financial system, and the various recent developments, it has been decided to set up a working group to review the regulatory guidelines and supervisory framework applicable to the CICs. Turning to financial markets, it has been decided to constitute an internal working group to review comprehensively the existing liquidity management framework and suggest measures to simplify the current liquidity management framework and clearly communicate the objectives, quantitative measures, and toolkit of liquidity management by the RBI. The group is expected to submit its report by mid-July 2019. In October 2017, the Reserve Bank had proposed the setting up of a foreign exchange trading platform for retail participants that would provide customers with access to an electronic trading platform through an internet-based application on which they can purchase, sell foreign currency at market clearing prices. The trading platform has now been developed by the Clearing Corporation of India and is being tested by the users. The platform will be available to users for transactions from early August 2019. Operational guidelines for the platform will be issued by end of June 2019. It has been the endeavor of the Reserve Bank to increase retail participation in government security market. In addition to the scheduled commercial banks and primary dealers, it has been decided to also allow specified stock exchanges approved by SEBI to act as aggregators, facilitators to aggregate the bids of their stockbrokers and other retail participants and submit a single consolidated bid under the non-competitive segment of primary auctions of the state development loans. This measure will be implemented in consultation with the respective state governments. In the area of payment and settlement systems, it has been decided to do away with the charges levied by the Reserve Bank for transactions processed in the RTGS and NEFT systems in order to provide an impetus to digital funds movement. Banks will be required in turn to pass these benefits to their customers. Instructions to banks in this regard will be issued within a week. Finally, with the usage of automated teller machines, that is ATMs, growing significantly, it has been decided to set up a committee involving all stakeholders under the chairmanship of the Chief Executive Officer, Indian Banks Association, to examine the entire gamut of ATM charges and fees. The committee is expected to submit its recommendations within 2 months of its first meeting. Thank you. I'll stop here and then we will take questions and observations. Yes, please.
Good morning, Governor. Lata from CNBC TV 18. No, there has been a default by an housing finance company. I wanted to know if the Reserve Bank believes that those entities can set themselves right by sale and acquisition, or whether you will consider any special measure, stressed asset purchase or refinance or any special measure. As well, you've said your stance is accommodative. Does it mean liquidity also will be accommodative? You've proposed a working group. Will that working group look at, only fixed rate reverse repo? How radical could be the change in liquidity that you are proposing?
You see, with regard to liquidity, as I have just said, that the internal working group, they have already started working, and the report will come by middle of July. So let's wait for that report to come. I don't want to prejudge and say whether it will be radical and what all will be included in that. So therefore, no, let me complete. No, let me please complete. So let us wait for the report of that internal working group. They will spell out what exactly is the approach, and then in any case it will be put out in the public domain. So far as the accommodative stance, whether it will lead to, what impact it will have on liquidity, I think in the statement somewhere I have said that, and as I have said earlier, the Reserve Bank will ensure that there is adequate liquidity in the system to meet the productive requirements of the economy. So we will ensure, RBI will ensure that there is adequate liquidity available in the system. And with regard to the NBFCs, you mentioned about a housing finance company. As you know, the RBI does not regulate the housing finance companies. Nonetheless, the banks have significant exposure to the housing finance companies, and RBI in any case is mandated to look after the financial stability of the entire economy. And in that background, RBI, we have been very closely monitoring the activity and the performance and the developments in the NBFC sector, including the housing finance companies. We are also monitoring major entities in this universe of NBFCs and housing finance companies. And as you pointed out, the individual entities themselves are resorting to various measures using market mechanisms to mobilize additional liquidity and to mobilize additional resources to meet their liabilities and commitments. So far as RBI is concerned, the RBI remains committed to ensure that we have a robust, well-functioning NBFC sector, and the RBI will not hesitate to take whatever steps are required to ensure that financial stability is not adversely impacted in any manner by any development.
Governor, can I?
Yeah.
I was a little intrigued actually to see that there's no mention of the ongoing crisis and developments in the NBFC sector in the policy statement. Is the RBI sufficiently confident that the problems that are being faced today are of liquidity and not of insolvency? Because if it is insolvency, no amount of liquidity will suffice to address the underlying problems, given the interconnectedness between the two. And for the long-term stability, you talked to, in response to Lata's question, you said you're concerned about long-term stability. But long-term stability of the financial system might necessitate allowing some of the larger NBFCs included to go down and not come to their rescue. Would the RBI be okay with the collapse of some large NBFCs, number one? Also, given the fact that supervision has now turned out to be the Achilles heel in RBI's armor, is there a case for a separate supervisory board, somewhat in the lines of the MPC, so the kind of discretion and concentration of power vested in the DG looking after commercial bank supervision is in some way mitigated, and you don't have the situation where so much of power rests with one DG, in which case should the RBI also think in terms of either a ban or a cooling period after which a DG, after he steps down from here, can join a regulated entity?
You see, first thing I would like to say is that you said so powers vested in the DG. The reports, the supervision reports are placed before the BFS, that is Board for Financial Supervision, which is a committee of the Central Board of the RBI. All inspection reports, all supervision reports, whether it is commercial banks or it is urban cooperative banks or NBFCs, they are placed before the BI, the Board for Financial Supervision. So far as the strengthening of the supervisory mechanism is concerned, we have in our, about a fortnight ago, we have already announced the formation of a separate cadre for regulation and supervision of banks, NBFCs and other financial institutions. And this is a major decision which has been taken basically to strengthen our regulation and to strengthen our supervision. When I said about financial stability, long-term financial stability, I would not like to see financial stability in a compartmentalized manner as short-term, medium-term or long-term. We look at the overall financial stability. And with regard to what would be the specific instruments and what would be the specific steps, I would not like to spell it out because it will lead to unnecessary speculation. Let me just repeat what I said a little while ago, that RBI will not hesitate to take any measure which is required to maintain the financial stability of the system, including short-term, medium-term and long-term.
Though there might be a conflict between the short term and the long term.
Sorry?
There might be a conflict between the short term and the long term.
We will examine all the complexities. Beyond that, it is difficult, it is not possible, and I would not like to, let me put it this, I would not like to spell it out and fuel speculation. Thank you.
Governor, we spoke, आपने मैन्युफैक्चरिंग सेक्टर और सर्विस सेक्टर के बारे में बताया, दोनों जगह काफ़ी स्लो डाउन एंड सबड्यूड इस वक्त इन्वायरमेंट है. अगर हम कॉर्पोरेट अर्निंग्स की बात करें, दे आर एक्चुअली अंडर लॉट ऑफ प्रेशर. डिमांड इज़ अ बिग प्रॉब्लम, स्लो डाउन इन डिमांड, वो आप कैसे देख रहे हैं, इम्प्रूव होगा? विल लिक्विडिटी रियली हेल्प दैट कम बैक या और स्टेप्स भी लेने पड़ेंगे?
यू सी, लिक्विडिटी जैसे मैंने कहा अभी सरप्लस मोड है. सिस्टम लिक्विडिटी, जो सिस्टम लेवल लिक्विडिटी है, अभी एट द मोमेंट सरप्लस मोड में है. अब इसमें ना हम 15,000 करोड़ का ऑलरेडी OMO 13 जून को वी हैव ऑलरेडी अनाउंस्ड. अदर इंस्ट्रूमेंट्स आर अवेलेबल. एज एंड व्हेन वी टेक डिसीजन, वो लिक्विडिटी हम इन्फ्यूज़ करते रहेंगे, अगेन बेस्ड ऑन रिक्वायरमेंट. और जो पॉलिसी रेट कट हुई है पिछले 2 फरवरी और अप्रैल में 50 बेसिस पॉइंट्स और आज का जो है 25 बेसिस पॉइंट्स, so 75 बेसिस पॉइंट्स रेट कट which has happened during this calendar year, it will translate to now the transmission has been about 21 basis points so far as fresh rupee loans are concerned. ये हमारा expectation है कि as we go forward there will be higher transmission and then there will be faster transmission also. So ये जो transmission है naturally it will find its impact, जो मतलब individual consumer loan हो या consumer durable loan हो या कोई 2-wheeler लोन हो, उसके ऊपर ज़रूर इसका इम्पैक्ट रहेगा और उस सेक्टर में भी इंटरेस्ट रेट कम होने का बहुत चांसेस है न्यू लोन्स के, so far as new loans are concerned.
So bank
Yeah, I think
Okay.
one question please. Yeah.
Good afternoon, Governor. Govardhan from Economic Times. So the MPC has met the expectation of 25 basis points cut, but given that the Fed itself has taken a U-turn in terms of from 3 rate hikes to 2 rate cuts this year, and you have cut both the GDP and the inflation forecast, how does the MPC still justify such a high real interest rates? Is it keeping the powder dry for a full-blown crisis?
You see, real interest rate, I think, there has been a lot of discussion about it, and it comes on the table for discussion from time to time. So far as we are concerned, our decision at the moment is driven by the growth concerns which is there in the, in the RBI Act, and also the inflation concerns. Inflation and growth, I mean, in that order. As per the mandate of the MPC targets a certain level of inflation, keeping in mind the requirements of growth. But while deciding all these things, other factors do come in. बट रियल इंटरेस्ट रेट के बारे में बहुत सारे व्यूज़ है, तो इसीलिए आई एट दिस पॉइंट ऑफ टाइम वुड नॉट लाइक टू स्पेल आउट व्हाट इज द रियल इंटरेस्ट रेट, व्हाट शुड बी द रियल इंटरेस्ट रेट, बिकॉज as we take decision, it is for you to judge, it is for you to take a call how close we are to the real interest rate calculated by you. Somebody may calculate it slightly differently. As the central bank, I would not like to spell out a real interest rate at this point of time, but it's for you to take a call whether we are moving closer, whether we are closing the gap, and we are moving, how close we are moving to the real interest rate. Right. Thank you.
Governor, just a follow-up to your comments on NBFCs, because that really is what everyone's concerned about in the sector at the moment. NBFC is finding it very, very difficult to raise money at the moment. If you're saying you'd like it to be a supportive environment, just to understand the thinking of the RBI, on one side, are you all right with, let's say, the weaker NBFCs in the system getting pushed out of the market? Or on the other side, would you be prevailing on, let's say, PSU banks to lend to these NBFCs that are starved for funds at this point?
No, I would just like to repeat what I said. The individual, the specifics of it, I would not like to get into. And we will take whatever steps, if and when they are required, we will take the steps. And we are monitoring the situation very closely. As you know, the NBFC supervision, the periodicity of the NBFC supervision, which was about 18 months earlier, now it has been reduced to 12 months. So every year there is an inspection of NBFCs. Major entities are also being very closely monitored in RBI. So RBI will not delay to take any action if and when such action is required.
Is there an AQR
And
plan
I think,
for NBFCs?
Governor?
sorry, if there is a decision, you will come to know. But I think when we are monitoring individual entities, already we have the data and we know what exactly is the position. Yes, please.
Governor, there's not much discussion, at least in this official statement, on the fiscal situation. We know that the government has met the 3.4% number, but there is widespread concern that subsidy payouts are not happening on time, so there is a build-up of borrowings at the FCI in particular, plus a lot of borrowings are being transferred to the books of public sector enterprises. Firstly, is the RBI concerned about the fact that that could crowd out private borrowers? Also, since there's so much borrowing from the National Small Savings Fund, there is an adverse incentive to keep small saving rates high, which will then again impede transmission. Isn't that a big hindrance to transmission right now as well?
You see, the government has broadly followed the fiscal glide path over the last 5 years. Broadly, the fiscal glide path has been followed. I think in 14-15, the fiscal deficit was about the budgeted number in the interim budget was about 4.5%. Then it was budgeted little lower, and I think they ended the year in 14-15 at 4.1%. Then it was 3.5, if I recollect correctly. Then it has now come down to 3.4. So broadly, they have followed the fiscal glide path. And so far as the borrowings by the public sector companies and the crowding out effect, the total borrowing requirement of the public sector companies will have to be seen in, from the perspective of 2 points. One is there are certain public sector entities like the NTPC or the, for example, the NTPC or the NHAI, which undertake a lot of capital expenditure and which have their own revenue streams to repay their borrowings. So therefore, it's better to look at that borrowing as a part of the capital investment requirements of the economy rather than seeing them as a borrowing by the government. No, these borrowings are supported by borrowings which are supported by revenue streams of public sector companies themselves, not depending on the budget for repayment, but they have their own revenue streams like the National Highway Authority or the National Thermal Power Corporation and similar. Let me just come back, please. No. So I didn't mention PFC. I said public sector entities which have their own revenue streams to repay those borrowings, they have to be taken together as a part of the overall, borrowing by the, by the what you call the industrial or the commercial sector of the economy. So far as the other sectors are concerned, the fiscal deficit numbers, The government, as I said, has broadly maintained the fiscal deficit glide path, and we do expect the government also to remain fiscally prudent, broadly fiscally prudent. As regards the other issues of small savings, etc., I am sure government will take note of the overall economic, the developments, and take whatever decision is considered necessary.
Governor.
Governor Bijoy from Cogensis.
I think I should now pass on to my colleagues to also reply. Yeah.
Yeah, just a addition to the earlier point that you made on the liquidity framework that you said is coming up, the review of the liquidity framework that's coming up. Is the way the government spends and the delays in government spending also creating frictional problems for the RBI in management of liquidity that leads to a lot of speculation about RBI not providing enough liquidity to the market, whether via OMO or the new tools like FX swaps? Is the fact that the government is not spending when its coffers have money, is that becoming a problem for the RBI in managing?
I think it was a temporary phenomenon during the election period. Usually when you have a general election, usually during such times the government expenditures tend to slow down. So therefore in the last 2 months or so, I think April and May, government expenditure had slightly, gone down because of the election period, and the focus was by the government agencies were on the election, etc. But now that the elections are behind us, I think government expenditures are already showing signs of pickup. And we do monitor, as you know, while looking at analyzing the overall liquidity, we do look at the currency in circulation, we do look at government expenditures, and all these aspects are taken into account.
So is there any update on the FEP 12 circular, the revised FEP 12?
The revised circular will be issued very shortly. It has taken some little more time than we anticipated because it involved examining various legal issues. It involved very detailed and wide-ranging stakeholder consultations, and then internally we had to examine it in detail. It has taken a little more time than we had originally anticipated, but it will be issued very shortly, and very shortly means in a matter of maybe next 3 or 4 days.
Governor, this is Gopika from Mint. I just want to understand RBI's thinking on the NBFC regulation. Is there a thinking to bring NBFCs in line with banks in terms of ensuring an emergency liquidity window and other regulatory framework? Also considering that there have been so many committees being set up and to sort of increase supervision of NBFCs. Do you acknowledge the fact that there were lapses on RBI's front in terms of supervision and that led to the recent events, that led to the crisis, basically?
You see, lapses, it's for you to really say whether there were lapses. I mean, but so far as RBI is concerned, I think I would believe, and I do believe, that our supervision mechanism is very robust, has been very robust. And from time to time, many aspects of a supervision report, which are available to us, are shared with the individual entities. It's not put in the public domain for obvious reasons. I mean, because it is between the regulator and the regulated entity. Our concerns are always, and it has been always so, they are shared with the individual entities with a specific direction to place it before their board of directors. So RBI expects the board of directors of the companies to take necessary action based on its supervision reports. And the compliance of the supervision reports are also monitored in subsequent, during the subsequent year inspections. So therefore, fine-tuning and improving supervision and regulation, the regulation and the supervision is a continuous exercise. And we have therefore, keeping in mind the requirement of the recent especially in the light of the recent developments, and keeping in mind the requirements of the growing complexity of our financial system, we have decided on this separate cadre for supervision and regulation.
Governor, will
Yeah.
you just supplement
Governor,
that?
one question from here.
Can I-
Manojit from The Hindu. In the last press conference, you indicated that the Jalan committee report should be out very soon, but it has not come out. There are some media reports that the finance ministry is not okay with the recommendations. Do you think RBI and the finance ministry is on the same page so far as the Jalan committee recommendations or the report is concerned?
You see, Jalan committee is working independently. I do not interfere, or I do not involve myself in any manner in the working of that committee. The committee is working on its own in an objective manner. And the rest of it which is appearing in the papers, I also see it in the papers. I am not aware. So let the committee of the report come. They needed some extra time because it needed, we had initially given 3 months, but the committee required some more time and we have accepted that. So we would expect the report to come very shortly. And the committee will take an appropriate view. Let the committee report come.
Governor, I know I've had my quota of one, but can I
No,
just want to
please.
have a supplement? You know, supervision of NBFCs can never be on par with banks. Is this not an opportunity for RBI to make it clear that banks are a different entity altogether? The entire idea of too big to fail applies only to banks, not to mutual funds, not to NBFCs. And if you send out the message that you are supervising NBFCs more closely and taking responsibility for that, RBI might end up biting off more than it can chew. NBFCs that are not efficient must be allowed to fail. That's the way the market functions. Mutual funds that are not take on risks more than they should not be rescued. So I think unless RBI does this and does it, you'll have to do it cleverly, smartly, so that markets don't panic. I think this is a very important signal to send that banks are different from NBFCs. They are more closely monitored, lower risk, lower return. Mutual funds, NBFCs, higher risk, higher return. If NBFCs go down, they must be allowed to go down, but with as little friction in the system as possible.
No, it goes
Rather
without
than-
it goes without saying that banks and NBFCs are different. They are different. They have different regulatory criteria. So far as the other points which you mentioned, these are suggestions which you have made. I'm sure my colleagues have made note of that. We will examine that.
सर, क्या आप ये कह रहे हैं कि म्यूचुअल फंड्स जो इस समय दिक्कत में हैं उनको पहले क्राइसिस के टाइम पे आरबीआई से सीधे मदद मिलती रही है, इस बार ऐसी कोई मदद आप नहीं करेंगे? या बैंक्स अगर एनबीएफसीज को एक्स्ट्रा एकोमोडेट करना चाहते हैं तो उनकी रीफाइनेंसिंग या उनकी किसी तरह की मदद आप नहीं करेंगे?
इसी एक तो ये है कि जो म्यूचुअल फंड्स है वो हम रेगुलेट नहीं करते हैं, वो आरबीआई के रेगुलेटरी परव्यू में नहीं है। बाकी एनबीएफसी सेक्टर के लिए जो मैंने पहले कह दिया उससे और कुछ ज़्यादा इस पॉइंट में मैं कहना नहीं चाहता हूँ। जब जरूरत पड़ेगा, इफ एंड व्हेन सम एक्शन इज रिक्वायर्ड, वी विल टेक इट।
सर एसएफआई की चार्जशीट का कहना है, चार्जशीट में कहा गया है कि आरबीआई को थोड़ा जल्दी एक्ट करना चाहिए था बिफोर द क्राइसिस।
मैंने एसएफआईओ का हमने आरबीआई में एसएफआईओ, वी आर नॉट अवेयर ऑफ द एसएफआईओ चार्जशीट, एंड इफ इट इज रेफर्ड टू अस बाय एनी अथॉरिटी, वी विल लुक एट इट।
They are saying basically that you should have acted. Before.
I don't know. That's what I'm saying. We don't have access to that charge sheet, and if anything is referred to us by any authority, we will look at it.
Hello, Mr. Governor. Here, this side.
Yes.
This is Kumud Das from Dainik Bhaskar. I have a query that the bankers, are complain, and they are saying that the number of willful defaulters is increasing, and the reason they say it is due to the variation in difference definition. RBI says that it is happening due to diversion of funds. So RBI says diversion of fund is a crime, but according to CRPC Act, it is not a crime. So there is a thin line difference. So what should be, the way forward?
आप लेना चाहिए इसको, मिस्टर विश्वनाथन और मिस्टर जैन। आई थिंक विश्वनाथन आप
if you look at what we have told as far as willful defaulter is concerned, is that once a person is declared as a willful defaulter, three things happen. One, though that company cannot get any loans from the banking system for 5 years after it has brought down the debt to 25 lakhs. Okay? And any company in which the director is associated cannot be lent to. So we are willful defaulter, we are not calling it as a crime. We are saying that he has made a willful default and therefore is a high risk, banks not lend to them. As far as we are concerned, that's our definition of willful default.
Yes, please.
Governor, could you elaborate on this change in stance to accommodative? What does it mean? And two is, if the monsoons are less than normal, would you be concerned about food prices or would you be more concerned about rural growth?
You see, accommodative stance would basically mean that rate increase is off the table. So far as the failure of monsoon, we have mentioned it in the MPC has mentioned it in our resolution, but at this point of time, the IMD forecast is very positive that it will be a normal monsoon. And food stocks also, I have mentioned about the, the buffer stocks of, being 3.4 times that of the existing stocks are 3.4 times that of the buffer requirements. So going forward, it will depend on how the situation plays out.
Sir,
Thank you. Mayur Shetty from Times of India. The policies made the observation that the transmission of rate cuts has been incomplete for even new borrowers, and for old borrowers it's actually gone up. So considering the time lag in transmission, do you think there's a need to relook at the MCLR?
You see, it has been noticed in the past that the transmission takes about 4 to 6 months. Sometimes it takes about 4 to 6 months it normally takes. That has been the pattern in the past. But this time I think the transmission has been faster than that. In about 2 to 3 months time, I think 21 basis points have been transmitted. And as I said, I think going forward we expect faster and higher transmission to happen.
सर एक्चुअली एवरेज कॉस्ट ऑफ फंड जो है वो बढ़े हैं, अगर आप वो डेटा देखें, और पब्लिक सेक्टर बैंक्स के लिए शायद 3 या 4 बेसिस पॉइंट ही कम हुए हैं, प्राइवेट सेक्टर बैंक्स के लिए एक्चुअली बढ़े हैं. मेरा सवाल जो मैं काफ़ी देर से पूछ रहा हूँ वो ये है कि क्या आपके आने से पहले जो हम एक तैयारी में थे कि एक मार्केट लिंक्ड सिस्टम बनाए जिससे बैंक्स तुरंत उसको पास ऑन करें, इसको डेफर कर दिया गया था. क्या आप इस बारे में कोई बातचीत हो रही है कि आप ये सिस्टम फिर से लागू करें ताकि एवरेज रेट जो है वो दरअसल नीचे आए?
नहीं, हम वी आर, I mean, again, last, as I said, it requires further examination, and we are monitoring the transmission. So, as soon as we take some decision in that regard, we will announce that. Please.
Thank you, Governor. This is Anup Roy from Business Standard. Sir, state development loans, it is a very risky thing. FPIs don't touch it. Many investors don't want to touch it. And now, through stock exchanges, you are encouraging retail investors to invest in it. So don't you think it is risky? Because retail investors don't know about the fiscal situations of states.
You see, the state development loans, as they are known, that is the borrowing by the state governments, are not risky at all. Because there is an implicit sovereign guarantee in them. You have the first thing is that the state governments are sub-sovereigns. Second thing is there is an implicit debit mechanism which RBI operates. On the due date of repayment, the RBI automatically debits the state government account and makes the repayment. So therefore, there is an implicit sovereign guarantee so far as state government loans are concerned. So therefore, they cannot be considered as risky. And this position has been accepted also by the BIS. Yes. It has been accepted also by the Bank for International Settlements.
So why do you
BIS.
think then the FPIs are not investing there?
I think FPI investments have, Mr. Kanungo, would you like to come in?
No, sir, as Governor correctly says, there is absolutely no default risk. And if you look at the rating mechanism that we have been talking about for some time, that has not started working, because what do you actually assess there? Because there is no default risk. However, there is a need for the states to continuously engage with the FPIs and others. There, I concede the point that compared to the GSEC, the FPI investment in the state government loan SDL is decidedly less. It is around say 7 to 8% of the limit.
Yes.
So there is a need for the state government to engage with them. And another aspect which the market has brought to our notice is the lack of information regarding the state of affairs in the state government finances, state government finances. So you would have noticed that in the recent past, with high frequency data is being released on several important areas to the market by Reserve Bank of India. And we're also continuously working towards this rating mechanism in consultation with the banks. Hopefully that will see the light of the day. So with these steps, I think the interest in the state development loan will increase. And the step that we have announced and Governor mentioned in his opening remarks is for broadening the investor base, so that GSEC was available to the retail investors. I mean, a mechanism was already there. Now we want the same mechanism to be followed in case of the state development loans.
Sorry, I have one
Just
small
one
follow-up.
moment. Just he
Linked
wanted.
to this, sir.
Sorry, no, he wanted to. DG wanted to say something. Yeah.
Yes, sir. Sorry.
I'll come back.
FPIs don't invest in SDLs because they are very illiquid. They need an exit mechanism. So I think it's not a credit risk problem, it's a liquidity risk problem. And I think what Kanungo sir was saying was that we are broadening the investor base. That should actually improve the liquidity of the SDLs potentially.
Thank you. Yeah.
Sir, just one small thing, sir.
Recently,
recently the Kerala Infrastructure Investment Board has raised dollar bonds. That's a completely state-backed entity. Even the revenue flow, etc., is all state. Is it not contrary to the constitution, which doesn't allow a sub-sovereign to raise foreign currency loans? The RBI approved it, so they're in the clear. But this is the first time a state has done this. Both in terms of pushing some expenditures into another entity, but also the constitution says that the sub-sovereign can only borrow within the country. The Kerala Infrastructure Investment Board, they recently raised a dollar bond.
No. I mean, I think you are talking about the chit fund investment that they have the Kerala government run chit fund.
No, sir.
To which the NRIs can subscribe.
No, sir. This is the Kerala Infrastructure Investment Board, which just did.
And RBI has permitted?
Yes, sir.
No, it is not permitted.
Sir, I think she's talking about masala bonds.
No, it wasn't a masala bond. It was a dollar bond. They've just listed it on foreign exchanges.
I'll check.
It was rupee bonds.
I have to check up.
It was rupee bonds.
Yes, please. You want?
सर बैंकों के अंदर होने वाले फ्रॉड को लेकर जो मालेगाम कमेटी बनाई गई थी, तो उसकी अभी क्या स्थिति है? पंजाब नेशनल बैंक का जो घोटाला था उसके बाद बनी थी, क्योंकि सर अभी के जो और आंकड़े आ रहे हैं वो कहीं ना कहीं आम जन के अंदर एक निराशा की भाव दे रहे हैं, जो बैंकों के प्रति उनका भरोसा कहीं ना कहीं डगमगा रहा है।
नहीं, बैंकों के प्रति भरोसा में कोई मतलब आंच नहीं आया है, लेकिन फ्रॉड्स में आप
5 साल से देखें तो लगातार जो फ्रॉड्स बढ़ते जा रहे हैं।
नहीं, ये जो डेटा अभी रिलीज हुआ है वो मतलब रिपोर्टिंग डेटा, मतलब इस साल कितने फ्रॉड्स रिपोर्ट हुए हैं, द एक्चुअल ऑकरेंस माइट हैव हैपेंड अर्लियर। ये रिपोर्टिंग डेटा जो आप पेपर में आ रहा है, मतलब 18-19 में इतने फ्रॉड्स वर रिपोर्टेड, बट एक्चुअल डेट ऑफ ऑकरेंस कैन बी and it is in previous years. I would request DG Jain to supplement.
With regard to the Malegam committee recommendation, we are already examining those recommendations, and wherever actions are warranted on our part, we are taking those actions. As Governor has told, this reported data of the fraud is not the date of the occurrence and the date of the advance when it was given. If these two numbers are also captured, then it is not pertaining to the recent year. The recent incident of coming out those fraud instances in large numbers in the public domain is because of couple of reasons which have been taken by RBI as well as by the Government of India to identify all NPA accounts 50 crore and above to the forensic audit. We came out with our guidelines on early warning signals as well as the red flag account. So because of these reasons, these instances of the past are surfacing in the recent.
Okay, I think the lady there, yes.
So this is Pandika from Money Control. I just wanted to understand what is RBI's view on the role of credit rating agencies in the current scenario. Do you think they've been doing their job well, or was there any shortfall in, in what they should have done, or has RBI assessed them in any way, or has taken any measures, or are you in touch with them on...
See, credit rating agencies, as you know, I mean, I would not, RBI cannot be commenting on how good or how bad they are performing, whether they are performing well, because they have a separate regulator. The SEBI is their regulator, so it's for SEBI to take a call, and I'm sure SEBI is, taking a call on that. So far as we are concerned, we are also as a part of our supervision, we are also having discussions and interaction with the auditors, with the credit rating agencies, and all other, all other entities which are involved while we are supervising a particular bank or any other entity. I think we should conclude.
Governor, just a final question.
Yeah, please, I think one.
Hi, Governor. This is Samir Hashmi here from the BBC. As you have noted in the statement that the growth impulses have weakened and economic growth has been a concern, and because of that you have also indicated there could be more rate cuts to accommodate the growth concerns. Now, the RBI has done its job. What steps do you think or you expect really New Delhi to take in order to have the desired effect? Because eventually it has to be, both the sides will have to play a role. So what concrete steps do you expect the new government to take in order to boost growth?
If I need to, give some suggestions to New Delhi, I'll do that directly with them and not through the media.
anything broadly you want to
But no, I mean, let's be clear on that. So if RBI has any suggestions, and in any case, before every budget, the Reserve Bank sends its suggestions to the Finance Ministry, to the government, and they do consider it. So therefore, this year also we are sending our suggestions to the government. It's for the government the Finance Ministry to take a call on that. And you had said that we had indicated further cuts. What I wanted to say, that is your conclusion. What I said is that accommodative stance basically means rate cut is not on the table, it is off the table. Beyond the rate hike, sorry, I stand corrected, because all of you have been, talking about rate cut so much. So rate cut gets into your system. I'm sorry, I stand corrected. Thank you. So the rate hike is off the table. You want to come in here? I think we should conclude.
Sir, the Supreme Court has asked you, issued strictures to Reserve Bank that you have to make annual reports public in that specific RTI query, annual inspections report. Any update on that? Will you allow it?
No, there is an order of the apex court of the country. There is an order of the Supreme Court, and we have to obey the Supreme Court orders, and there is no question of going against that. And consequent to that, we have already made necessary changes in our disclosure policy. You can see it in the website also. Necessary changes have been made in our disclosure policy.
The RTI guys have got the annual inspection.
Individual cases I don't recall.
Sir,
I do not know.
next
I think we
round
should
of,
conclude.
Bank merger, उसका meetings या deliberations शुरू हो गए
वो
हैं,
जब हो
timeline?
जाएगा आपको पता लग जाएगा. Budget is coming, so I think
How are you looking forward to working with a new woman finance minister? With trepidation, greater wariness?
Well, I have worked with the finance minister, the present finance minister. I have worked with her earlier. She was, when I was in the finance ministry, she was in the Ministry of Finance as Minister of State. But then, it is a system. It is the RBI system which works with the government system. So thank you very much.